Hello students, welcome to my YouTube channel Sun Academy. Today in this lecture we are going to start a new chapter in financial accounts of business purchase. Now in this chapter we will learn how company purchases any firm. So whenever company decides to purchase any firm, there are two ways to purchase. First is net assets method and second is purchase consideration method. In first method, company will find out the net assets of the firm and pay it the same amount equal to net assets. In that process, first of all, company will take total assets minus total liabilities. That will give us net assets. In this process, there may be conditions that value of X assets is to be calculated in this way, or value of furniture will be this, or value of building is to be decided this amount. So, or stock is to be taken at 10% less or 5% less, or debtors are to be calculated at 5% less. In this way, total assets will be found out. From that, total liabilities will be subtracted. In that case also, there may be condition that creditors will be paid 5% less, or bills payable will be paid 10% less, or other liabilities may be not taken by the company, so that liability will be paid by the firm. In similar way, company may not take any asset, so that asset will be sold out by the firm on its own. After finding out net assets, company will pay to that firm, that is called purchase consideration. In net assets method, what is the figure of net asset? That will be the purchase consideration. While in consideration method, this is mainly called consideration method. Company pays lump sum amount to the firm, then after it calculates whether assets are more greater than the paid amount or assets are less than the. If assets are more than the paid amount, then that is written as capital reserve. If assets are less than the paid amount, then that is written as goodwill. In first case, company will be in profit because it has paid less amount than the net assets, so that profit is written as capital reserve. While in the second case, company has paid more amount than the net assets, so that loss is to be considered as goodwill because company has paid more amount. Now finding this calculation, then after journal is written, so that is simple. assets comes in, that's why assets account will be debited and liabilities account will be credited, and to vendors account. Amount which is to be paid to purchase the business will be credited as vendors account. Then after vendors account will be debited, to what company pays to the vendor will be credited. Suppose company pays to him equity share capital, balance amount is paid in cash. So suppose company has purchased firm for 1 crore and company is paying 80 lakh as equity share capital. So 80 lakh equity share capital will be credited and 20 lakh cash account will be credited. There will be more points in this process. So next lecture, by taking an example, or we will solve a simple question where I will explain all the points deeply. So if you want to learn this chapter, continue with me. If you are not still following us, do follow, do share link of our channel, and always comment on lecture.